Hey everyone, Tom here. Today we'll be talking about the latest stock market news that is currently moving the markets, as well as our technical analysis levels for the S&P 500, Nasdaq, and gold. We've seen big moves in gold over the last 24 hours, with the resistance being taken out. Where to next for that? And also the Nasdaq and S&P 500 are signaling further bullish moves ahead of China and the US trade talks. Stay tuned. So as we always like to do together, let's have a quick look now at what's been moving the markets over the last day. So again, a bit of chop. We've seen a bit of a movement into actually energy, which has been interesting. So there's been a movement into energy and consumer defensive. Semiconductors are doing decently over the last 24 hours. When we look at the 1 week performance, things become a little bit different. It's still been the big tech companies that are driving the markets. Obviously, if we are seeing strong trade talk discussions coming up on August 15th, that's going to be important for all of these tech companies. We've talked on this channel before about how tech companies are really susceptible to trade tensions. In fact, if there was a breakdown fully of the trade pacts and trade tensions became incredibly paramount, these would become incredibly risky positions, as in the FANG stocks and other tech companies. They will not do well off that piece of news. Speaking about China and of course the US, they're going to review their trade deal and potentially air their grievances on August 15th. This will now be a pretty important kind of event in the markets. And as I've said on this channel a few times, we're going to see most likely a positive July. We'll probably see some form of positivity into August. And then usually September is actually the weaker month. And I'll be doing a video about this later this week. So if you're interested in that, remember to subscribe and of course hit that alert button. So if this deal goes ahead and everybody is happy and the markets are given the green lights, expect further bullish momentum. And that's what I want to discuss today about. We want to discuss what is currently going on with this Nasdaq. So for anyone that's been watching it, the Nasdaq has of course been the most bullish index of the American indexes. It's not a surprise. We are seeing a big movement into tech. We are seeing that becoming the new defensive. But we've mentioned a few times that we like to do a top-down approach and go through kind of what the key levels are right now. Well, one thing I mention all the time is shooting star candles like this one here, while they seem great, happen quite often, and they're often bear traps for retail traders. Unfortunately, this is the kind of candle that people always think is incredibly bearish because of what it signifies in the market, which is that the bears have effectively won that particular trade date, and people short or sell immediately after that. And I really think the market is taking advantage of those types of traders. What I want to really talk more about today, though, is what we've seen on the S&P 500 and Nasdaq in terms of moves above these zones and what it signified before. Well, when this shooting star was broken, notice it closed above and then it had a nice, big, strong kind of bullish move up to the next psychological zone. What are we seeing right now on the Nasdaq? We are seeing another break of a key wick zone, which is also a key channel range. When we go down to the daily, it becomes more apparent how important this range is. And what do we know from a technical perspective about ranges? Well, we know when ranges are broken, there is always a technical take profit zone that you could be looking at. So with a technical take profit zone, how do we measure that? Well, we take the range distance, which in the futures here is going to be between kind of this 10,500 and 11,000 kind of 70, 80 zone. And then you extrapolate that out and that gives you effectively where the market should move to next. So the market is really signaling kind of that 11,500 to 11,600 area. Where I want to look at it a little bit differently is that if the market is breaking out here, I like to use kind of like more of a real market index. So what I want to do is actually talk about the real market here is in the Nasdaq index and the real closes, when the real volume is going through the markets. We've talked about how that's really important on the S&P 500, and of course it's very important for the Nasdaq as well. We'll draw up the horizontal kind of lines here, and we've got a horizontal line that goes across 11,000, that key psychological number. And then of course we've got a key horizontal line that goes across that 10,500 zone. So if we look at both of those and then we work out kind of the distance of the range that we expect by using the trend line, we can work out where the market is really signaling to go next now that it's broken above. as you'll notice in the real market on the weekly here, it's kind of signaling that 11,500 zone, 11,493. The distance of a channel generally becomes the distance that the market expects. And as we say on this channel all the time, you would want to be looking at taking your profits slightly earlier than what your expectation is, as that's what the market likes to do. Just like with gold, where it kind of topped out just before the 2000 and then exploded through the 2000 last night, that is what's happening on the Nasdaq right now. So we've got a nice close above here. The channel is pretty much signaling that. When we go down to the daily, we can see on the real market that it's clearly closed above now in terms of what we've seen yesterday and yesterday's move. What you now expect to do is you now expect to dial down into the smaller time frames and see how the market interacts with this 11,000 zone. Now that it's closed at all-time highs, generally the market will usually kind of hover around. The longer it actually accumulates above this zone and breaks out above, the stronger the pattern is towards that kind of 11,500. So we have a couple of options. One, it consolidates up here, breaks out above, and becomes incredibly strong bullish momentum into the 11,500. Or we have that kind of fake out situation where the market doesn't continue to go up. What I like to do is I always like to look at conservative entries. So you might see the market do this, come back down. The 20 exponential moving average will have moved up by that time. It will act as dynamic support on this 4-hour time frame, and then that becomes a good kind of entry position that is conservative over time. You can do this in currencies, you can do this in gold, you can do this in stocks. The same kind of approach can be used, and while you're going to get less executions, you're going to have more confidence that you've put yourself in the best possible positions possible. So yes, this is what's pretty much happening on the Nasdaq right now. It's moving in that direction. So what's happening on the US 500, the S&P 500? Well, again, we are seeing key breakoffs. 3,300 has been breached on the futures here. We are 33.15 currently as the time of recording this video. And we have seen another shooting star being broken against. Basically, when it goes through here, it is taking out stop losses of the smaller traders, of the retail traders. And it really just signifies further bullish strength up to the 3,400 zone. So that's what we're seeing on the S&P 500, at least on the weekly. When we dial it into the daily, we can see a series of pretty strong kind of bullish candles coming in, showing that when the bears sold it off, the bulls just whacked it back in. We've mentioned several times on this channel how this 20 exponential average has been a reload zone in the buying on the daily. And it was certainly during this period. And of course, now we're just slowly melting up. We're just slowly getting up, grinding higher. And now that we've ground above this zone, we would expect the market to potentially maybe pull back into it. The 32.75, 32.80 to become now where resistance becomes support from a price action standpoint. We'll have the 20 exponential moving average on the daily sitting behind it, and for it to continuously grind higher during this period. It just makes sense that it's going to try to do this, and that's just because we've now got some idea that there's trade talks happening. We obviously are going into an election, and for now, we haven't seen really too much extra bearish news. There's always bearish news out there, but again, we want to trade what we see, and that's what we do on this channel. We don't have FOMO, but we trade the key levels and we trade through those zones. What about gold? Well, gold has broken its ascending triangle. We discussed this in our week analysis as well. We discussed how it was making a series of higher lows. Nice higher low coming into the break here. If we take this and we just consider these lines here for a second, I'll just quickly fix that. And we take this resistance break of the 1980. Now, notice it happened, and all this consolidation happened before the 2000. That's often what happens before it's going to break. It'll top out, create high volatility, start ranging, and then if we see a nice pattern form, and especially this pattern where we had the 20 exponential moving average again holding this aggressive trend, and then we have this nice bullish candle. Now, remember, the bullish hammer in the direction of trend is a lot stronger than a shooting star against the trend. We do not want to be going against that trend, as the trend is our friend until the very end, as many people will say. Here we are seeing the pretty strong move. We've pretty much almost already finished what we expected. We put in the analysis this week that it was probably going to go around this distance up to the 2040, I think, depending on spot. you would expect it to go there already. It has done so. 2035, we've sit at 2030. That will be where a lot of traders were taking profit, as they don't take profit necessarily up at the 2040. But now we're above 2000 in gold. What do we think is going to happen at 2000 or at 1980? Well, 1980 is going to become an incredibly good technical buy zone. We've got plenty of resistances across the top here that will act as support. And we also have the 2000 psychological, where the market might come down here, and at the same time it's coming down here, it's going to hit that 20 exponential moving average. And what has it done in the past? Well, it's bounced off these zones. Of course, you want to do your own analysis, but these are some of the things and the processes that I go through. Have I ever been bearish gold throughout this bull run? Absolutely not. And why is that? Well, the entire bull run of gold has been up. Look at this. It has been up the entire time. If you were bearish on it, you would have to be doing it on the smaller time frames. And the bull run is saying continuously buying until the market breaks very key zones. And we have not seen that, and it takes a long time for that to form. So like the stock market, gold is still long, silver is pretty much still long, and all we're looking for is consolidation. And when consolidation happens, the next breakout occurs, the next breakout we want to trade, and so on and so forth. So hopefully this video has helped you today. If it has, make sure to subscribe. And of course, we'll be coming at you tomorrow with another video updating you on the markets ahead of non-farm payrolls. This week's going to be still another very interesting week, but it looks like we're just grinding higher for now on the stock markets. And I still think there's great trading opportunities in other pairs and other indices. So always try to broaden your horizon. Don't necessarily just stick to one index. I know that makes sense and you want to learn it, but there are always other opportunities. Good luck, everybody. Stay safe, stay healthy. Bye.